All right, we're live. So thanks for sitting down with me. I appreciate it. This is Andrew with the Above Average Investor podcast. Today we're interviewing a good friend and another local Montana investor, Cheyenne, about real estate investing. So just gonna jump right into it and try to learn something. So thanks.
Thanks for having me.
Yeah. So just getting started, why'd you start investing in general? What intrigued you to save money or invest versus not saving anything or just saving it under your mattress or in the bank? Like, what even gave you the idea of investing?
I think I grew up around the construction trades, so we built houses and we would do different things. And at one point, my family had a house that there was a sale that kind of went wrong, and they ended up keeping it as a rental just for a little while to generate income until it could sell. And then pretty soon they just kept it because it was generating revenue. And so my family had kind of gotten into a few of the rental things, and I could just see how a little bit of an investment could produce a long-term income stream. And it just kind of hit me, and I just kind of fell in love with the whole process.
Nice. Does your family still have that rental?
Yep. They
Okay.
have lots of rentals now.
Oh, so that was the first one, and then they've stuck with it and
Yep.
bought more. Okay.
Yep.
Very cool. Nice. All single family, or they expanded to multifamily?
Most of it's single family. They just got done building a little duplex, and that's not like large scale. I mean, between my dad and my uncle, they have probably like 5 doors is all.
Yeah.
But they had a subdivision that they had put together a long time ago, probably like 20 years ago. And just as those lots were kind of taken up and doing different things, they were able to build rentals in some of those spots too.
Yeah.
And so they have a couple of single families, and then they just got done building a duplex.
Nice.
Yeah.
I mean, even with 5 though, like once those are paid off, you know, that if rent's $1,000 a month, maybe more, but you know, call it a $5,000 a month pension or retirement. If you have a paid off house, paid off cars, I don't see it that hard to live on $5,000 a month. I feel like that'd be pretty comfortable.
Yeah, absolutely. And again, like growing up in the trades, I don't have a retirement account.
Right.
No 401ks, no nothing like that. So I feel like if I can build something like this,
Yeah.
Okay, so even then we're talking about they have 5 doors at the end of 30 years when everything's paid off. I mean, 5 times 400,000, that's a pretty good chunk of change.
Right.
You know.
I was talking to some friends last weekend at a bonfire about real estate, and one of their dads down in Florida had been a real estate investor for a couple decades, sold it. I got the idea it was a 20 unit, a 50 unit, a 100 unit, a big apartment building, sold that off 5-10 years ago. He was into it for 30 years, something like that. And I was talking to them how, like, your example of 5 paid off properties at 400 is $2 million, and how hard it is to save $100 a month, $500 a month, $1,000 a month. To add that up to $2 million, it takes sacrifice for most people for a decade, 2 decades, 3 decades, 4 decades. Your dad and uncle may have only put $20,000 down on these houses, maybe $50,000. I would guess less than 50, maybe. But so they're into them 100 to 300, maybe to 400. Call it that low 6-figure range, and they just, you know, they have to remodel, I'm sure, a little bit and put $5,000 in, $10,000 here and there every few years as like a major deal of $10,000, and but then you can call it 200 for a round number of down payments into $2 million potentially. It's really, and just the difference of like that one-time sacrifice versus I have a 401k through my employers, but I mean that's every month I got to put into it, and for me to someday get $2 million, I mean I got to stay employed and contribute for 40 years,
right?
Literally.
Yeah, and that's kind of the story with mine. I don't know if you're going to get there, but our first investment was we had bought 3 little dumpy houses on one lot. And
Yeah.
It was a smoking deal. It was $60,000, and it was like 5 years ago, you know, before everything went bananas.
$60,000 for all 3 units?
Yeah.
Wow.
Yeah, and so we had to come up with, I think, 15,000.
Yeah.
And so my wife and I just kind of sold some stuff and pulled some stuff together, and we made it happen. And
Right.
some people will buy and hold, and they keep stuff forever. I'm kind of a buy and sell guy by nature.
Yeah.
And so we held on to those places for like a year, and then we turned around and sold them and doubled our money. And then the guy that bought those was a friend of ours, and he made money on those same deals. And so I feel like now where our portfolio is at, we're close to $2 million worth of stuff, and it's only been a couple of years. And
It's crazy.
I mean, we turned $15,000 into a couple $1 million.
Yeah.
So it seems like other than real estate, it's kind of hard for me to be able to fathom doing something like that.
Absolutely. Yeah, and recently, within the last 6 months, I heard something, saw the numbers, but the stock market's doubled since like 2019, plus or minus a year. But yeah, you could have turned your 15 into 30 grand doing literally nothing, And I'm a fan of the stock market, don't get me wrong, but yeah, it's not 15 into 30, much less 300, much less more than that. Yeah.
Yep.
So it's wild.
And I think I love real estate too, because you can get creative with things, and there's no right or wrong answer to doing stuff. Like I've never really done anything in the stock market, so I don't want to bash it, but it kind of just like you put your money in, you let it do its thing. Whereas with real estate, you have owner financing, you can pay cash, there's just so many different options to try to do things. Wholesaling, flipping, renting. There's just so many different directions to go, and I feel like I kind of really like that aspect.
The creativity of it,
Yeah, or even house hacking, just making sure that you are optimizing your investment to the most. I think that's pretty cool.
Yeah. It's hard for a lot of people to wrap their mind around how to get started, especially are there creative ways to get started with no money? Theoretically, yes. It's a lot easier with $15,000 as an example down payment. It gets you in the door for sure, generally. But yeah, once you start having some equity as well, one thing I really like that I find fascinating, I just bought a camper, and I keep a low amount of savings generally. But I have some money saved up in the stock market. That's kind of my emergency fund. And so I could have sold some stocks, paid capital gains taxes, 15% for long-term capital gains. That would have been fine, paid cash then for the camper. However, one strategy that I used recently, which I find really cool, is I have a HELOC on my primary residence that has equity since I bought it before COVID. And so I could go to the bank, walked up and got a pile of cash. I went and asked for X amount of dollars in cash, in hundreds. They handed it me there, and I went and traded it for the camper, and my mortgage is increased by $40. It's insane. Like $40, there's people that spend more than that on Starbucks.
Absolutely.
A month. I'll still probably pay it off. I'll take my rental cash flow and my day job excess savings, and I'll just throw it at the HELOC until it's gone over the next few months, and that'll be fine. But I had to pay zero taxes on that. Capital gains taxes, that it doesn't exist on that. And the HELOC is at a 4% interest rate per year, but that's all deductible because it's a real estate mortgage. So it's just fascinating.
And you have no loan origination fees, no doc fees, nothing like that. So yeah. And
I can just rinse and repeat. And one thing I regret is during COVID, when interest rates were low and I got this HELOC, I'm a Dave Ramsey graduate. I'm pretty anti-debt. And I was, for some reason, intimidated or scared by taking on too much of a HELOC. Not that I was going to go buy lottery tickets with it, but I could have gotten 100, maybe 200 in the HELOC. I only got 50. Now I regret that, because that's 100 or 200. If I saw a deal that I wanted, and I wanted to put 200 down on it tomorrow, that would give me the access to that. But if I want to borrow from my 401k that has some savings in it as well, I've got to pay taxes and fees and apply, and it's just a mess. We're now, one thing I wish I would have done, and it's not per se a regret, it's just an optimization, but I think I'd rather have 50 grand after tax versus 100 grand in a 401k. And mathematically, I can liquidate my 100 or a theoretical 100 I have in my 401k and get greater than 50, but not much more with the taxes and the penalties. But just having savings I can spend today without any hoops, I value that a lot.
Absolutely.
And
cash on hand is important.
yeah, I finally get it, and obviously wildly different scale for me and you, but like Warren Buffett and Charlie Munger, I like a lot of the stuff that they say, and the late Charlie Munger, but he has a quote that says there's worse things than drowning in cash for multiple years. Well, he's like, don't get FOMO'd by that. And one thing I like about Charlie Munger, one idea he has is, if you're an investor, imagine you get a coupon or a ticket. You're only allowed to punch it 20 times in your entire life. 20 investments total. Once you hit 20, you're not allowed to invest in anything till you die. And you have to hold those things. Everything you buy, you have to hold till you're dead as well. He's like, if those were the rules, you would make wildly different decisions. And he's like, that's what me and Warren do. We only buy stuff that we're comfortable dying with. And he's like, it has to be a home run deal, kind of, sort of. And he's like, you don't need 100 home runs in your life. You only need 5 or 10 or 3. You only need 5 rental units paid off. You don't need 500.
Yeah.
So your family has some rentals. You and your wife now have some rentals. Has that encouraged others in your family to get into real estate, or what's the general other consensus, or are you guys crazy?
Actually, not really. I think a lot of people just see it as such a huge risk, and they see how busy we are a lot of times, and they just don't want any part of it. And I think they like the idea of having stuff, but then the second it comes down to spending some money or doing something new and out of the ordinary, it scares a lot of people. For sure.
Yeah, I've seen that too in my family. Like if how many wanted to go spend $1,000 out of their paycheck at Home Depot? To me, it's no big deal now. It's just like, it's fine.
Yeah.
But I know so many people who would feel so strifed if it was like, yeah, you should go spend $1,000 of your dollars at Home Depot and give them all to your client or your customer, or your rental, your renter. Yeah.
Yeah. And even with that aspect too, I really like trying new things too. So we just bought a condo here not too long ago that we're Airbnb-ing.
Yeah.
And it was strictly because I wanted to try it.
Cool.
I hear a lot of people say that they make super good money on it. And yeah, it's kind of a hassle as far as some time and learning some stuff, but it's turning out really good. And now I can say that I did it.
Yeah.
And I like trying different aspects of it. Whereas a lot of investors, they find their little groove that they get comfortable with, and they're not going to deviate from it.
Yeah.
So whether it's, long-term, mid-term, whatever, they've found their little niche, and that's it.
Yeah. And if it works for them,
Yeah, absolutely. No, totally, for sure. But I've had long-term rentals. Now I've done the short-term and mid-term thing. Now I want to try storage units, car washes,
Nice.
Commercial, like land development. I want to do it all.
Cool. Would you buy another Airbnb? What's your initial thoughts then?
Yeah, I totally would. I've learned a lot about Airbnb, and I think during COVID and the years prior to now, the market's been so bananas for it, and people have just been gobbling it up, trying to get out and do something different. And now that we're phasing back out of that, you can't just like Airbnb your bedroom and expect that you're going to do well.
Yeah.
You have to have a pretty cool environment that people want to come, where they want to be in your place other than a hotel or whatever else. So I think a lot of people are losing their Airbnb drive because of that.
Really? Just because it's a competitive market and you have to actually try.
Yep. So I would totally do it again. And actually, that's what I like about it. Like our Airbnb now, we make it a whole cool environment to be there. We got arcade games, and we've got big screen TVs, and it's in walking distance to a lot of stuff, and people love it. And I think I would do that again, but I another really cool environment for people to want to go to.
If you had to guess, like percentage wise, what's the profit you're making relative to what you think you could long term? If 100% is long term rental, do you think you're making double, 50% more, double, triple?
I'd say on a regular basis we make about 50% more.
Okay.
Yep. And then kind of rolling into the summer, we have some more long-term tenants, and it's really, really different profit margins. They're quite a bit better.
Very cool.
Not saying that that's going to be continuous,
Right.
But yeah, kind of on average, I'd say probably about 50%.
Okay. So your first deal, I know a lot of listeners are probably not experienced real estate investors, and it's easier to relate on somebody's first deal than their fifth deal per se. What lessons did you learn about that first deal, or maybe just tell us about that? It was those 3 houses.
Yeah, first 3 houses. Honestly, I feel like the biggest lesson that I learned with that one is just make it happen. I think we all get analysis paralysis, so we get scared of the what ifs and what's going to happen. But I didn't even think about it. I just knew that it was going to be a decent deal. Yeah, it was going to take some work. It was going to take a lot of learning. But if you don't just take the action to do it, you'll never be prepared for that kind of stuff.
Right.
You can learn as much as you want about property management. You can learn as much as you want about construction. You can learn about whatever, but until you actually put yourself in that situation, you'll never be prepared.
Yeah.
So when you take the action, then you deal with it as it comes, and pretty soon it's no big deal.
Yeah.
So I think that was the biggest thing that I learned, was just do it.
Yeah, swing the bat.
Get into it. Yep.
Nice. Other than, numbers or like, finance and money, but in your life, and maybe it's flexibility or time or new skills, what has real estate investing given you? Like, why do you continue to do it? Or is it just the money, or is it?
I just really enjoy putting the numbers together. I enjoy finding deals, finding the different ways to make a deal work. I really enjoy all that, and I think the long-term effects that it'll have. I think honestly with my real estate stuff, if I can keep going at the pace that I've been going, it won't take very long before my life is quite a bit easier as far as my time frame or my schedule during the day. What I need to bring in every month in order to be comfortable.
Yeah.
Pretty soon that starts to offset itself pretty good, and I don't know how else to do that.
I agree. My investment income, real estate income, cash flow, that's increased now to where those first few years it was arguably negative. I was inputting, to Home Depot a lot every year. I've remodeled like half a dozen now, and it's finally to the point where all of them are remodeled, and now the cash flow is bumping up. And I'm starting to realize, like, I don't need 100% of my day job income to live a lifestyle based off 100% of my day job income. I only need a fraction of that now, and it's really eye-opening, and I don't know how to do it either, from a different avenue. And even like, I've been house hacking now for 5 years. I've been driving the same truck for 11 years in a little car for buzzing around town, and I've just even had self-awareness now the last year probably that I don't have to live in a duplex forever. I can afford just a normal house. And I can, if I want to go buy a new or slightly used Camry for a nicer buzz around car, I can just go do that whenever I want. And it's just wildly different for me, right? I started from very modest means with a lot of student loan debt and truck debt. I had no trust fund, no easy layout per se. And I just don't know how else to do that. As opposed to if I would have put all that overtime into my job, and maybe I'd be making $10,000 a year more, 20, maybe $50,000 a year more, which is an unrealistic high exaggeration. Even that doesn't move the needle because I still have to show up to work. It's kind of cool. Well, thanks for your time today, Cheyenne. I appreciate it, and it's always fun to talk to you.
Absolutely.
So, thanks, man.